Welcome to the weekly market wrap-up. I'm Hannah Bernard. The bulls ran hard this week with the S&P 500 and the Dow Jones shattering all-time record highs. The liftoff was spurred in part by the European Central Bank's historic decision to move its deposit rate into negative territory. What is a negative deposit rate and what will be the impact on the economy? Let's find out. Record-breaking has become commonplace on Wall Street. The Dow Jones Industrial Average rocketed up 98.58 points on Thursday to close at 16,836. The S&P 500 locked in its 17th record close of the year, gaining 0.65% in overall value on Thursday to close at 1,940. And while the Nasdaq struggled a bit this week, it rallied on Thursday, gaining over 1% in value to close at 4,296. Now let's turn to Canadian markets, which saw the TSX turn in a fantastic week. The Toronto Stock Exchange gained over 200 points since last Friday, closing yesterday at 14,800. The TSX Venture Exchange didn't fare as well, only holding on to a 1-point gain over the week, closing Thursday at 985. The U.S. market's rally to record highs this week was due in part to buoyed optimism resulting from the European Central Bank's boost to its economic stimulus program. The ECB, in its efforts to combat low inflation, lowered its deposit rate to minus 0.1% from zero, making the institution the world's first major central bank to use a negative rate. This means Eurozone banks will now have to pay a fee to rest their money at the central bank. Changing the deposit rate is a tool central banks can use to influence how banks spend their reserves. If banks can earn a healthy return depositing reserves at a central bank, they are likely to do so, freezing out the capital from the economy. But if they can't, they're likely to move their cash elsewhere, meaning increased lending to households and businesses, which benefits the broader economy. This is why the move boosted markets this week. While the markets did do well this week, investors were wary of making any big moves ahead of the U.S. government's monthly jobs report, which comes out later today. This month's report could mark an important milestone. The U.S. economy needs to add just 113,000 more jobs in order to finally recover all of the jobs lost in the financial crisis. And the economy may just deliver. However, overall jobs growth is still underperforming. According to data from paycheck processor ADP, private sector payrolls grew by 179,000 in May, which was below the 210,000 figure that economists had predicted. Now over to winners and losers in our picks for the week. The winner for this week is LSB Financial Corp, ticker symbol LSBI. LSB shares jumped nearly 42% on Wednesday to $40.12. Hitting a new 52-week high after the company agreed to be purchased by Old National Bancorp for $41.67 per share or $66.7 million. LSB is the holding company of Lafayette Savings Bank and reported a net profit margin of 12% last quarter. Old National is already touting the purchase on their website and is expecting the cash and stock merger to be immediately accretive, $7.5 million or 3 cents per share to its 2015 earnings. And the loser for this week is ZNGA Inc., ticker symbol ZNGA. Zynga shares plunged 9% on Thursday. On news, 3 more executives have departed the social game maker. The departures come amidst unimpressive growth in net income, weak operating cash flow, and disappointing historical performance in the stock itself. Zynga launched what is considered the best-known social game, Farmville, on Facebook in 2009, reaching 10 million daily active users within 6 weeks. The company's IPO in December 2011 fell flat, and its stock has been in trouble ever since. Well, those were our winners and losers for this week, and now it's time to check in on the gains you could have locked in by following the weekly watch list from Robert James and Viral Stocks. That's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earning reports are coming out next week. Here are 3 U.S. stocks to watch. First up on Monday is Comverse Inc. with an EPS forecast of 3 cents compared to 12 cents in the prior year quarter. Comverse is a global telecom leader in voice over LTE services. Their stock has taken a beating, falling from $40 in January to a $24 close this Wednesday. Next up on Wednesday is H&R Block Inc. with an EPS forecast of $3.19 compared to $2.54 in the prior year quarter. And finally on Thursday is Lululemon Athletica Inc. with an EPS forecast of 32 cents, identical to the prior year quarter. Here are 3 Canadian stocks to watch next week. First up on Monday is Cardero Resource Corp. with an EPS forecast of break even, compared to a loss of 3 cents in the prior year quarter. This week, the Vancouver-based Cardero withdrew from the coal lease between the Peace River Partnership and Cardero Coal regarding certain freehold coal rights forming part of the Carbon Creek project. Next up on Wednesday is Dominion Diamond Corporation with an EPS forecast of 13 cents compared to 3 cents in the prior quarter. And finally on Friday is Transat AT Inc. with an EPS forecast for a loss of 35 cents compared to a loss of 4 cents in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. But before you head out, make sure to subscribe to the YouTube channel and find us on Facebook and on Twitter. For Viral Network News and BayStreet.ca, I'm Hannah Bernard.